Okay, we're going to take a look at a company called Core Laboratories. Core Laboratories is a company that specializes in offshore drilling in really some of the most hostile environments in the world. And they also offer consulting and specialized, consulting work on to oil companies that are looking to go ahead and to drill in these kind of really hostile natural environments. But they also go ahead and they offer expertise on how to be able to extract the most amount of oil whenever it's found. So they're really in a unique marketplace. They've been around since the early part of the 20th century, and they have highly specialized knowledge, which gives them a strong, durable competitive advantage, really good fundamentals, and a lot of unique services and everything for that particular industry. So that said, fundamentally, it's a good company. We know it. It's got all the kinds of characteristics that we're looking for. So that's going to be expressed in the price action, which is kind of what we're going to be doing right now. We're going to take a top-bottom approach to it. We're going to use the 3 time periods and the 3 different types of trends to determine where the action's happening, and we're also going to take a look at price action and chart patterns and other unique indicators that show where we can get in the most low-risk fashion possible and extract the most amount of money. So having said all of that, this is the monthly chart for the stock. And you can tell the monthly price bars, they start over here at the lower left-hand side of the price pattern. The price chart, which is a really strong bullish indicator as it starts to travel to the upper right-hand portion. So, little tip: when you're scanning through a bunch of stocks that you've been tracking, if you look for this kind of visual, then you can automatically tell at a glance whether the stock is trending or whether it's not. Likewise, over here, if it was starting up here and it was trending downward, well, then you have some bearish price movement. So now that we know that on the long-term side, the stock is definitely moving upward, let's take a look at some of the interesting things that happened along the way. Now, as we can see, price was moving in a period of expansion right here, and then it kind of ran into a dip, into a pullback. And if we just break out our trusty Fibonacci tools, we can tell that price is pulled back here to the 38.2, which is what I call the 40. Little tip, or what I do, I don't really use anything other than the 38.2 and the 61.8 retracement. And I'll explain more about what that means in some later videos. But when it pulls back here to what I call the 40, that typically means that there's a really strong chance that the stock is going to meet or exceed its previous high, which it did. It didn't go very far because then it pulled back again, and this time it pulled back here to the 40 from the price run here, once it's been adjusted up here to around the 144 area. Now, we can kind of tell that as it was traveling back down during the retracement that something was going on here. And we're going to look at that in just a moment. But let me just also kind of add, when price moves back, let's say that price pulled back here and then took off. If it did and then it came up and met its old high, that's where you want to be, because that means there's a lot of strength. If it didn't even pull back to the 40, it's still going on a tear, and you want to go ahead and take advantage of that momentum. So getting back to this, we're going to break down to the intermediate term trend, and we're going to take a look at what's going on at that price level and see if there's some opportunities that are forming up. Okay, let's go back a little bit here. All right, so here's the decline that's taking place. Around 144, price comes down, doesn't quite make it to the 40, pulls back, and then bam, hits it. Now, what's going on? When you see price start to decline again, there's a couple of interesting things that are taking place. There is that point, and then it comes down and makes this point. So this is a double bottom that's forming up. And this double bottom here is a sign that a reversal pattern is underway. And so what we're looking for at that point is we can either buy right here, and we'd probably be looking about that bar, but this is the weekly chart, and this, because of risk loss and where you set your stops, that might not be a good place to do it. We'll scale down here in just a second, and I'll show you more about where to look to time your entries. But we're really looking for something to happen right up in here. once price starts to move. And as you can tell, there's some really strong price movement right about that time when price began to resume its upward trend. And you can even tell down right up in here that that volume really kind of spiked upward. All real positive signs, a lot of indicators that price is moving higher. And that's what we want to see. We want to see a resumption of the trend take place from here, this bottoming pattern, this double bottom pattern here at the 40 retracement on the long-term chart, and in sync with the price movement on the long-term price movement. So let's go down to the daily chart and let's take a look at what's going on down there. Now let's back up a little bit. Okay, we can kind of see where the double bottom was forming here. There's this huge gap down, and I want to zero in on here at the bottom just for a minute, okay? Now, when you've got this kind of disparity that's going on, and let me show you what I'm talking about. When you got the, don't know what happened there. This kind of disparity that's going on. And look at volume. Volume just spiked huge, okay? Look at normal volume up in here, and all of a sudden, bam. So you've got a decline, it goes up. You've got the you've got a double bottom that's forming on the intermediate trend. Long-term trend is still upward. You got a lot of factors here that are saying that something's going on. Well, when there's this big of a price difference here, it's usually an overreaction, and all the bears jump in at the same time. And this is what is called or referred to as an exhaustion gap, where everybody just sells at the same time. It punishes the stock unnecessarily, and there are really no more bears, not enough to really force price down lower. So let's take a look here. Let's zoom in here at the bottom. Sorry about that. Hang on. We are having small technical difficulties. All right. So here's the bottom of the double bottom on the intermediate trend. Sorry, I got a little bit of a brain cramp. But here is a bottom. It goes up. It comes down. And then it starts to come out. Now here's where we're starting to look for some activity. Really, we're looking for something to happen up here, some kind of price reaction, because we talked about, do we want to try and buy here at the bottom? Well, if the opportunity presents itself, otherwise we've got to wait for price to exceed, to confirm a long entry right up in here. Somewhere up in here. And so it doesn't necessarily mean that you want to buy as price is going up, which you can do, but look what happens here. You get a little bit of fuzzy action up here. So if we're looking to get in early on it, and we all want to get in early on it if we can, we're looking for some kind of reaction to happen down here. So it touches, we could buy off support here. There's enough of a case to be made. You could buy off support. So, probably somewhere right up in here is where you're looking to get long. Or you can look and see that there's a price pattern that's starting to form. Take a look at this. You have a left shoulder, the head, and you have a right shoulder. You've got an inverse head and shoulders pattern forming at the second low of a double bottom pattern at the second bottom. And so you've got a convergence of factors that are going on, and it's all happening right here at the 40. And the 40 says that if you have a retracement at the 40 and it starts to react at that level and resume its upward trend, that you've got it's statistically is likely to meet its former high or exceed its former high. So we're looking for price to kind of pop up out of right here. And here is where you would have been looking to go long, right up in there. And look, it barely pulled back and it went up and you had a really strong bullish action. So even if you kind of sat through some of this period right here, this period of anxiety where price was contracting, you still would have been in a good position to go ahead and wait it out. But if you didn't get in here, where would you get in? Up here. Well, let's take a look. Price starts to develop. And as it starts to kind of go past its former high, you see some really strong bullish action right here. And you start to see little laps in price right up in here. And then price starts to zigzag a little bit into another period of another period of contraction. And look, you got a triangle. Now, let me explain what this means. You got price that has some bullish price action, but you still have some doubt, some anxiety here. So you've got investors that they probably bought up in here, and then price comes down, and then it goes up, goes down, goes up, goes down, goes up, and it really contracts in here. And so that's a lot of anxiety and doubt. There's investors there that are thinking, okay, did I buy too high? Is this stock going to keep going higher? Is it going to go lower? Should I buy more? Should I sell? Should I tighten my stop? All of those doubts and everything are manifesting itself right here in the triangle. So, bam, there's your entry right there. Really, you could enter here on the second day. There's some ways that you can kind of tell to get in early right here with some really simple indicators, but that's another video. Using just the price pattern itself, this is where you could go ahead and take a second entry, or you could go ahead and add on to the position that you had at the bottom of the double bottom pattern. So price comes up. Now, we talked about an exhaustion gap to the downside. It looks like that's what's happened right here, but price is still holding steady. You've got this period of contraction that's taking place, but it's holding, and it's forming kind of a base pattern. So there's a good shot, at least, that that this has got a chance to go ahead and exceed this former high. And if you like, I don't know what the retracement is. More like this is just a shallow retracement, but you can see that price is still trending higher. So this stock is still in play. Look for more chart patterns. It looks like we got a base pattern that's forming up. So unless something significant that happens to derail this stock, it looks like it's going to exceed $200 and keep traveling from there. So that's an example of how price patterns can help you spot low risk entries to get in, and some of the thought processes behind how to analyze price action and what the market's trying to tell you to do. All right, well, listen, I hope that was helpful to you, and I'll see you in another video, okay? Good trading.